What's going on YouTube, day trading fanatics? Today, we are talking about stop losses, entries, risk to reward, and all of that fun stuff. And guess what? It does not only apply to futures or really any type of instrument in general. It's an overall idea on where you should be putting your stop losses at, what you should be thinking about with your entries, and why it's so important to make sure that your entries, your stop losses, and all of that stuff is on point. What I'm looking at and what I'm thinking every time I place a trade. Gonna talk about it right here in this video, so make sure you guys stay tuned. Alright, so let's talk about stop losses. Alright. Stop losses. What are we looking at here? Alright, this is a good example. Right now. If I'm looking to enter this trade, I'd probably look to get short because you can see we had kind of lower highs, a little bounce back up here, a little bit of resistance in this area. Thinking that if this kind of loses this support here, it'll probably roll off and want to get back down to the 28s or maybe lower later on. Now, first off, this does not apply only to futures. This also applies to stocks and everything else that you trade, cryptocurrency, whatever you want to trade. This is applying to everything and anything that basically moves on a chart. So if I'm getting short here at, let's say I short here at the 36s, where is my stop going to be? Now, this really comes down to your overall risk to reward. If your, risk to reward is very tight, if you can only risk 3 or 4 handles, $3 or $4 per trade, then, I'm putting my stop probably here, right? I'm putting my stop right there at that 38 level. Now the problem with putting my stop so tight, and I'm sure you guys have actually experienced this multiple times in your trading career, your trading life, is what happens. I enter a trade, I enter here at the 36s, I put my stop right above this candle, seeing that we have resistance there. So if I put my stop there, I enter here, and then what happens? The market pushes back up, it pushes through my stop loss, I get stopped out, it goes up to here, and then finally turns down. Now, that's something you really got to think about, and I've been really focused on that lately, is if my stop is too tight here at the 130 area, I'm short at 136, I'm risking 2, and this pops to 139 and then sells off, is it bad or is it good? How many times has this happened to you guys where you enter a trade, you put your stop loss, you get stopped out, and then the trade goes the exact direction that you were thinking about going? One thing that I'm really focused on right now is instead of being like, okay, I'm going to get short here at 136, I'm going to put my stop there at 138. What I'd be looking to do here on this type of setup is I'm maybe take a little bit of a starter here, but I'm looking to kind of add, right? I'm looking to add if this pushes up there to the 140 area. I want to see maybe getting a little overextended from the EMAs up there to the 140 area. So really here on this, my stop is, 141, 143 area. So I want to make sure that my entry reflects that risk to reward. So I'm not looking to load up at the 135 area, seeing that my risk to reward is not going to be, good. I'm not going to want to risk 7, 8 handles here for maybe only a 6 to 5 handle move lower. So that's one thing to really focus on. One thing that I focus on now, like I said, is making sure that my entries are at a key point that I can have a good risk to reward. So I'm not just focused on, hey, where's my stop loss at? But I'm really focused on, okay, if I'm entering this trade at this point, if I'm entering here, where is my stop going to be in correlation to, the overall trend? So I'm also putting my stop. I'm putting my stop at a point where the trend is no longer valid, right? So this is a good example. Last night, I ended up buying here at the 110s. I was buying here at the 110s. We got this move higher. Now, where was my stop at? My stop after buying here at the 110s is obviously going to be right down here below this candle at the 106s. Now, that gives me a 4-handle stop. 4-handle, wiggle room there on that stop. So I'm going to risk 4 for a possible 10, 20 to 30 handle move, which is beautiful. Beautiful move, beautiful action. That's what I'm looking for every single day. So what is the key to this, right? Why is it that I'm looking at this like, okay, we pop up, We bing, 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 bing. We went sideways. We had a little bit of a pullback here. Remember, we dropped through this support. So that's one thing to think about is if you were long at this 12 area, look at this. It drops down there to 106 right through your stop loss and then trends higher. So for me, if I'm getting long here at the 11s or the 12s, I've got to kind of look at it like, all right, where is my stop at? Where is the key area to have a stop? Obviously, I don't want to just buy here at 112, put my stop at 110, and call it a day. I need to look at it like, okay, I might not want to enter this trade because I might not want to jump in here because my stop's going to be like right here, and that's going to be a little too tight. Like I said, really focused on my entries, making it all kind of work out with where my stop is. So I'm buying here at the 110s. After we got this move lower, we bounce back up here. Now you can see we had this low here at the 106 area. We had this low here at 109. I'm buying here at 110. I'm putting my stop right below that 106 area. So I'm risking 4. And look at this move. All the way up there to 46s. That's a 30 handle move. A little over a 30 handle move from my entry last night. I ended up taking most of the profit here at the 128s because I wanted to go to bed because it was 1 a.m. in the morning. But look at this, up there to 146. Beautiful, right? That's the kind of moves that we're looking for. And like I said, this is not just for stocks. This is not just for the overall market and the S&P, things like that. Look at this move. It's breaking down. Oh, no. I'm putting my stop loss, if I'm trying to get long, let's say I'm trying to get long here for some reason, I'm putting my stop loss at a point where it invalidates the trend. So I'm placing a stop, I'm placing my entry, I'm buying a stock, I'm buying into the market at an area that I believe the trend is going to hold. If that area does not hold, then I'm looking to get stopped out. Like I said, if I'm buying here, let's just say I bought the dip. Let's say I'm buying here, 133. I bought in this area because we can see we had a little bit of support there. We pulled back. Okay, so I'm buying here. I don't really love this because, again, look at this. So if I'm buying here at 133, where's my stop at? My stop really isn't all the way down here till 125. It's too big of a risk there for me. So this wouldn't be a good setup for my type of strategy. That's not what I'm looking for. I'm looking for entries at areas that have good overall risk to reward. This could be okay. I could buy the dip here at the 128s, but the problem, seeing that we had a little bit of resistance before at the 128s, maybe that turns into support, which it ended up doing. So I can buy here at the 128s, and guess what? I can put my stop right below these candles there at 125. I'm buying 128s. I'm putting my stop right below this previous consolidation area. And again, guess what? I'm risking 4 handles. 4 handles, 3 handles there on that move. That's the type of entry and stop loss that I'm looking to have. If I'm buying here at 133, my stop is too wide. It's too wide, too much risk, not enough reward there. So that's what I'm always focused on. I'm not just focused on, okay, I'm buying here, I'm putting my stop. It's not how it works. It's not just like, okay, I'm going to short here, I'm putting my stop here. I'm looking to buy and I'm looking to short at areas where there's a overall trend support, and also the idea that if the trend does change and I get stopped out, it's because overall I'm getting stopped out because the trend is changing. It's not because my trade is bad. It's just that the trend is not holding up and it's not going to go higher, things like that. So same idea here. If I'm buying, it's always easy in hindsight and hard in hindsight sometimes. Same idea. I wouldn't want to buy this pop here, the 133s, because the stop loss is just too big there. Now, let's say if I'm buying this breakout there, it's still, that's still 6 handles. Overall, at that point, it's a little high. But say going back there, the 114 area, 113 area, I can risk, again, I don't really want to risk from the 113s to the 105. So I'm always thinking about where my entry is going to be in correlation to my target and my risk to reward. Now, does this mean you're going to nail every single trade? No. There's going to be trades you're going to miss out on because you're going to be a little bit more patient. You're going to have a little bit more, I don't want to say greed, but you're going to be a little bit greedier with your entries because, again, you're looking for that risk to reward, constantly looking for that optimal risk to reward. If I'm shorting at a key area, where's my risk at? What's my reward? I'm always thinking about that. And that's what I'm looking at here, stop loss. If you're trading volatile penny stocks, you should really only be using a mental stop loss. So, if you're buying the dip, okay, I'm buying here at 133. I'm risking down here off the 128s. Maybe this now is going to create a new trend. We're going to trend higher from there. I could do that, but again, I'm risking a little bit more than I want to risk. So at this point, if I'm really looking to get long here, if I'm like, I want to get long I'm looking to buy again at the 128 area. I want to see this pull back to the 128s. I want to risk off the 125 area, and that would be the trade that I'm looking to take. I'm always thinking about risk to reward with my entries and my stop losses, and that's really the big focus here, people. The big focus. I'm not just focused on, oh God, I'm going to jump in and I'm going to put my stop at just a random area. I'm not going to be like, okay, I'm going to buy here and I'll put my stop there. You know, that's not what we're looking to do. I'm not buying here at the 36s and put my stop at 134 just because I'm thinking that's a good area to put it. I'm looking for a advantage to have a stop at a certain area that would then invalidate the trend. So we're looking for trends and we're looking for invalidation of that trend. So if I'm, shorting, let's say I short here at 146, it's going lower, going lower, going lower. All right, we got this overall trend. I'm kind of moving my mental stop down as we go, and I'm looking at this like, well, look at this. Look at this, people. We break out of this overall trend. Okay, I'm getting out there, right? Maybe I put my stop here at the 36s. I get stopped out. That's still a 10-handle move. Again, risk to reward, risk to reward. Constantly thinking about my risk to reward, and that's really the big focus here. So if you guys haven't already, do me one big favor, hit that like button, subscribe button, and all the buttons down below.